Organizational structures. Businesses use organizational structures to illustrate roles and responsibilities. Organizational structures show who each employee reports to in their job. An organizational structure is how a business organizes its staff to represent the different layers of management. This information can be displayed in the form of a chart. There are two main types of organizational structure used in businesses: hierarchical or tall and flat. What is a hierarchical structure? A hierarchical structure is often also referred to as a tall organizational structure. A hierarchical structure has many layers of management, and businesses with this structure often use a top-down approach with a long chain of command. In a hierarchical structure, managers will have a narrow span of control and a relatively small number of subordinates. What is a flat structure? A flat structure is an organizational structure with only a few layers of management. In a flat structure, managers have a wide span of control with more subordinates, and there is usually a short chain of command. Flat organizational structures are commonly used by smaller businesses or those adopting a more modern approach to management. What are the key terms in an organizational structure? There are a number of key terms that apply to organizational structures. Span of control, the number of staff that a manager has responsibility for. Chain of command, the route by which instructions and communications flow from the top to the bottom of a business, explaining who is answerable to who. Delayering, a process where a business removes layers of its management to make its structure more flat. Delegation, a process where tasks are given to members of staff, where often managers give tasks to employees further down the chain of command. Subordinates, members of staff below a manager in the chain of command. What is an organizational structures? Businesses use organizational structures to illustrate job roles and responsibilities. Organizational structures show who each employee reports to in their job. Centralized and decentralized organizational structures. Businesses usually use two main forms of management called centralized and decentralized. What is a centralized management structure? A centralized structure is where business decisions are made at the top of the business or in a head office and distributed down the chain of command. It is often used in retail chains. Usually, all branches will operate in the same way, and store managers will have very little input into how their individual store is operated. Businesses with a centralized management style can often be slow to respond to changes in the business environment or local changes near their branches. What are the advantages of a centralized management structure? Consistency across the business. The business has a clear direction. Operations and decisions are closely controlled and managed. The chain of command and accountability are clear. What are the disadvantages of a centralized management structure? It can demotivate employees. A standardized approach may not work in all business locations. It may lower productivity. What is a decentralized management structure? A decentralized approach is where a business allows decisions to be made by managers and subordinates further down the chain. This structure provides staff with more decision-making responsibilities. For example, individual stores or departments may make decisions on staffing levels, which products and services to offer for sale, and pricing. Businesses with a decentralized management structure can often respond quickly to changes in the business environment and the local area. What are the advantages of a decentralized management structure? Improved employee motivation, allowing managers lower down the chain to make decisions to suit their local area and customers. More responsibility for employees. What are the disadvantages of a decentralized management structure? Consistency is not achieved across the business. Managers can make ineffective decisions, may negatively impact sales and overall business performance, for example, because of ineffective decisions by managers lower down the chain. Organizational structures. Businesses use organizational structures to illustrate roles and responsibilities. Organizational structures show who each employee reports to in their job. What is the impact of communication on efficiency and motivation? Effective communication is important in any business. The type of organizational structure and the management approach a business chooses each have a significant impact on the type and amount of communication the business uses. As a business grows, maintaining an effective level of communication becomes increasingly difficult. Communication in a business can be done in a number of ways. The most common methods are emails, text messages, online shared spaces, communication apps, letters, reports, phone calls, video, conferencing, and face-to-face meetings. When communication is not done well, there can be negative effects on business performance. Ineffective communication falls into two categories: insufficient and excessive. What is insufficient communication? Insufficient communication means not enough communication or poor quality communication. Insufficient communication can negatively impact efficiency and motivation, as employees may not fully understand what is required of them or what is happening across the business as a whole. This may have a negative impact on overall business performance and decrease the productivity of employees. What is excessive communication? Excessive communication means too much communication. For example, employees may receive too much communication in general, or they may receive the same message via multiple channels. This can often cause employees to become confused or feel stressed or overloaded. Ultimately, excessive communication can have a similar impact on efficiency and motivation to insufficient communication. Businesses use organizational structures to illustrate roles and responsibilities. Organizational structures show who each employee reports to in their job.